Hello traders everywhere, Adam Hewison here, president of INO.com and co-creator of MarketClub with your video market update for Tuesday, the 26th of February. Well, just a few more days and we go to sequestration. That's a big thing to be talking about. Yesterday's concerns, which we talked about with Italy and sequestration, became today's reality. And Helicopter Ben is reporting to the Senate committee earlier today. And we'll see how this thing plays out. But generally speaking, the big news is gold is up $22 today. Closing right now at $1,615.90. And we're looking at gold today, but we'll also be looking at some other markets on the move as well. So let's go right to our portfolio. And the first market we're going to be looking at is going to be the S&P 500. As you can see right now, our daily and weekly down. That's a negative right now. So let's go there. And you can see yesterday was a big move down. Most of this happened late in the day. One of the cool things with MarketClub, you can actually look at this on a very short term. If you so consider, you could go like a 10-minute chart, and you can see how basically boom, 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 all of this happened. Really, I would say it really accelerated right after about 1:30 yesterday afternoon Eastern Standard Time, and it kind of just went into a free fall. We've had a little bit of a recovery. I think we're probably going to run out of steam here. We're obviously overbought on a very short-term technical basis, but as a MarketClub member, you can have access to these intraday charts, which really go from go right here from 1 minute to quarterly. So you've got lots of choices for charts. If you like charts and you like to read the charts, this is a chartist heaven. So let's go back to our daily charts, which we look at, and right here. And let's get a closer view of that, maybe the last 3 months. And you can see we're at the lower end of the Donchian trade channel. We may see a little bit of a pop, but I think for the most part, this market's not going to go anywhere until something happens with the sequestration. But the bigger problem in this whole equation, in my mind, is really the situation in Italy. And that's going to be really a problem as we see it now. You can see the Dow had a similar pattern on the downside. A little bit of a recovery today, largely because of Home Depot reported their earnings, and it was a very positive, and that makes up a large part of the Dow. So that's why the Dow is up relative to the S&P and also the NASDAQ. So still looks toppy to us. This is the NASDAQ. As I said, we've talked about the NASDAQ before. Really never got... I tell you what, let me show you a couple of things in this. You can see basically we're sort of getting towards these highs in the NASDAQ just maybe the last couple of years. You can see really didn't clear that high. Kind of really concerned. It's a natural place for it to fail, just like it failed here. Just got a little bit over that, came back down. It didn't quite do it this time, maybe by a few points, but it's coming back down. But let's just go back to our portfolio and let's take a look at the S&P 500 because I want to show you a bigger picture here. And if we go out even further, and we just get our technical telestrator here. You can see back here, this is the April, this is in the 2007 period. So we're looking at the September-October period of 07. So that's 6 years ago. And we're right up here again. The question is, can it overcome that? I think it's going to have a challenge. We were looking for the S&P go to 1550. If we scope this in even closer, we can see how close we got to that target zone. And let's just get to 6 month. We got up to 1530. But still, we didn't get 1550. So the market reversed quite dramatically. It is oversold, so we may see some more information coming in there. And I think that's one of the key things to look at is seeing how this market reacts to future news out of Europe, more so than the sequester. The sequester is one thing, because we're cutting expenses, but the austerity in Europe has not been adopted, and it is likely not to be adopted, which I think is going to cause real problems for the markets potentially. So let's take a look at the crude oil market. That's had a fall from grace here. We trade down to below 92 today, and you can see where that stands. So that's where we are now, new low here, and it needs to regroup, as we mentioned yesterday, before it's going to go higher. Longer term, we still have the monthly trade triangle is still positive, but now, right about now, it needs to regroup and start getting stronger if it's going to recover at all. If the world equity markets go into a swoon or a tailspin, then this is going to probably be a little bit more on the defensive, as demand will probably be down for this market. So let's see what happens. And on gold, gold had the big move. We've got, let's put our weekly trade triangles in. As we covered this yesterday, we covered our short position here at 1586 right here. So we're pretty much neutral on this, but isn't that nice that we covered a short position from 1653 at 1586 and made $67 profit, or $6,700 profit. We are not in the market right now on our short term. Intermediate term and short term. So we want to give this market some time, some room to grow. I would imagine right around this period, the 1620 level, which is the midpoint of the Donchian trade channel, is probably going to offer resistance to gold. So let's see how that works out. One of the big stories, of course, is being the euro, the crash of the euro. And this is, if you remember yesterday, we were talking about this market being the 130 to 131 level as being an area which should find some support we expected, which is these previous lows. We may be doing a little bit more backing and filling, but clearly the weekly and the daily are down right now. And if you're an intermediate term trader, you should be out of this market completely. If you're a longer term trader, rather, if you're an intermediate term trader, you should be short the euro. Using the weekly for your trend and the daily for timing. So let's see how that plays out. This is the EWI, this is the index we talked about. And you can see it really, the key level there, I think we covered it, is that I think we're looking right here, if I'm looking at this correctly, is 1218. It's 1223 right now. And yesterday the low was 1212. So really, in theory, the market should actually be in, these all should be red. It's just when you have this huge move like that, it just throws it off. You see we put an arrow here, but the reality is it should be all red. So Italy, I just want to be official here so we get this right. And that is, this is the symbol for the Italian index on the iShares, and it's EWI, and it is now bearish. These are all red triangles, all red here. So that's what we're looking at, and I would think we're going to see that all happen, and we're going to see this market go lower. So that's bottom line, is if you're in this index and you own it, you want to be out of it or short. But I think the best thing to be is probably just out of it until that whole picture in Italy sorts itself out. So let's clear the screen and go to our next market. The next market we're going to be looking at is the British pound. We looked at this yesterday in terms of it was under a lot of pressure. We've caught this market nicely. It's down today again, no follow through. Does not look good. Unemployment, recession in the UK is still there, as it is in Italy and most parts of Europe. So they're not coming back anytime soon. They've had a fairly tight fiscal monetary thing. If they go into an inflationary print money status, which they could well do, it's going to cause all kinds of problems here. So let's see what happens on our next market. Now this came up with our trade triangles today when we looked earlier. This symbol is DFS, it's Discover Financial. And you can see there's the monthly kicked in today, and there's the date 2/26 at 37.36, it's 37.83, and indicating actually that this is a large top potentially right here, this whole top. We talked about energy fields. This is just the reverse of an energy field. This is like a distribution field. This is where the market, this stock is being distributed over a period of time, going back really since last October. And what we need to see really is a close below 37.50. So if you really want to be conservative, you may want to just wait until this market closes below 37.50. But nonetheless, you should either be out of this market or short. So that's how we're viewing this stock, DFS. So let's go to our next market. Let's clear the screen and go to our next stock. We figured with NFX is Newfield Exploration. And what this criteria is, we wanted to see stocks that have traded over 2 million shares. And again, this is a very negative pattern we see. We've come back down here to new lows. Let me just refresh this a little bit here. And new lows, so the indication that this trend is on the downside, and we'll look to see how that, but how we found this, there's the monthly right there. Again, let me just go back to a chart. How we found that is basically because of the, that's not showing up here for some reason, but you can see on the, this NFX newbie is the monthly right there. It says today 30:03 Tuesday, February 26th. So again, it's showing up here. It just hasn't shown on the chart yet, but you can see this. This is why the portfolio is so valuable. You can see these signals as they occur. But the easy way to find new trades is with our trade triangle technology. And you've heard me talk about that many times. And all you have to do is go here and put the criteria that you're looking for, equity. And I'm going to look for equity over 2 million. Now I looked earlier today, and that's what I came up with. So, and I want to see monthly, and I want to see search for today, and just scan that. So there you go. So it's actually expanded this Newfield Exploration, symbol NFX, which we talked about. There's Vitamin Shop, which is a signal today right across the board. And Discover Financial, which we talked about. Axial, another signal right across the board. Looks like RR Donnelly may have had a buy signal, not a buy signal, but certainly a trend change to the upside, which would be a buy signal. And you've got Goodyear Tire and Rubber, a negative signal there, and a positive signal on the Swiss franc, which should be, that's the currency. So anyway, let me just look at this for a quick second for the Vitamin Shop, which is trading at 50.98. And we had the signal. Let's just go to the chart and let's see what the chart says, because we have all the signals in place there. So as this chart's coming up, you can see, wow, what a huge pop that was. Let's get a little more space on here. That is not looking good. That is not looking good. That's clear. This is the lowest it's been since last, all the way back to June of 2012. So this is not looking good. I would think this trend's going to continue. Look at the volume here. Massive volume for a stock that usually trades about 500,000 shares, maybe even on a busy day, maybe 1.5 million. But here you're up to 3 million. Definitely not a good sign for this particular market. So, hey, I'm Adam Hewison for MarketClub. Thanks for stopping by. We had some little bit of a technical challenge here getting out today, but I'm glad we were able to do it. I hope you enjoyed it. And thank you for using MarketClub. If you're not already a MarketClub member, I urge you to check it out. I think you'll be very happy with the service, and it'll show you some great trades. Have a great trading day.